Hey, what's going on, everybody? It is Aaron Trevino here, and we have another wonderful guest. We have Mike from Northern California. How you doing, Mike?
Hey, great, Aaron. Thank you for having me on.
Absolutely. It's been a good morning, and it's great to connect with you and finally have you on the show.
Absolutely. Been looking forward to it.
Definitely, Mike. So for those of us who aren't too familiar with you, would you introduce yourself, please?
Sure. Yeah, my name is Mike Derosiers. I live in Northern California, up in the San Francisco Bay Area. So I've been in single family, homes and rentals for quite some time, many years. Got into the multifamily just really about 3 years ago through some of the training and education, but it's accelerated the last year and a half quite a bit through connections and partners where I've accumulated some different properties, and mostly in Texas, but Kansas City, Missouri as well, Las Vegas, and of course I have my single family in California. It's been quite a ride, a lot of fun. I got in mostly as a general partner with most of the properties, or a key principal. I'm in a 426 unit property in Kansas City, Missouri, 60 units in College Station, Texas, 88 units in College Station, Texas. I have a smaller building in Las Vegas, and then again, the single family, and in contract with two, actually three deals really right now in Texas as well. So it's been a lot of fun.
Absolutely. That's a big operation, kind of taking care of all those properties.
Yeah, for me, it's been, I've gotten involved with other people's properties. It's kind of how it started, raising money, or, just trying to help out in every way that I can, because I'm just really interested in it. And it just has grown into stronger partnerships with the different operators, and including in one of the properties we're in right now in Fort Worth, where, we've come up, myself and my partners come up with the property itself, but we bring in another syndication set of partners to come in and help work that with us. And it's really been, you can't, these large properties, you can't do them by yourself. So it's really a team effort, which I really love, because I've spent 30 years in the advertising business and the marketing, and I have a company that focuses on that, but it's not really a very collaborative business, right? In the advertising and marketing, when you have an issue or a problem or a question, it's not like you call another advertising company and say, hey, what do you think about this, right? Because if you do, they're going to take that idea and roll with it in about 6 seconds. But in this syndication business especially, but even in real estate, everybody really wants to help everybody else out. And beginners or advanced, it doesn't matter. Everybody really collaborates well, and you need good partners in order to really do a good job and safely go through the sometimes muddy waters of investments. So it makes it much easier and a lot of fun.
Absolutely. I'm sure, at least for you, kind of transitioning between industries, that's kind of I would assume maybe a difficult mindset shift, kind of going from that world of marketing advertising where, you keep your own ideas versus going into this collaborative real estate environment.
Yes, but refreshing. It's definitely, I enjoy it a lot. Yeah, because real estate's been around. That's probably the oldest business, from the first guy that had his first cave, back in the caveman days, right? And he wanted to probably trade it for some rocks to somebody else or something. But it's really been an industry, been around a long time, and so there's really no magic to it. It is kind of very, calculating, and just calculating your risk, and finding the right markets and the right properties that make the right sense. But it's a lot of fun. I like it.
Yeah, absolutely, Mike. So I know you touched on a bit, of the types of properties you work on in multifamily, a bit about marketing and advertising. I'm just curious about your background. From a younger age, did you know that you wanted to get into real estate, or what was kind of your introduction to the industry?
Yeah. Well, I've always had rentals, really, even from, just my first house that, I was able to buy, and then I moved into another one and just rented that out. and had always had a rental of some sort of another, or, I got into, kind of fixing and flipping, and, but it's always been more on the single family side of things. And I got introduced to the multifamily through some of these educational seminars that are out there. And, just basically went to one and kind of listened to it, and never really thought that was something that could be obtained by me. You talk about a 100-unit plus, apartment complex that's, 10 or $20 million or something, right? It just seems so unheard of. And I really kind of even went to the initial seminar, kind of very, not thinking that that was something that was going to really happen, but I just really wanted to hear, some ideas on that. But the more you start really learning about it, and, the whole concept of using other people's money and bringing investors in, which is really a great deal for the investors. It's a great opportunity for them to get into the same kind of real estate without, having to do all the work, and it makes it obtainable. And yeah, the more you learn, and, that's the thing. I mean, you can't fake this business, right? So it's you have to really know what you're talking about. And as the more education that you get, and the more you learn about how this all works, it really builds a lot of confidence in yourself about all those aspects. Buying the property, finding the property, financing the property, bringing in investors. When you feel confident with it, it makes it kind of easy.
Sure thing. I guess like anything else, it's just kind of, what would they call it? The 10,000 hour rule or whatever that is, right?
Exactly. Yeah.
Sure. I'm curious because you kind of hear this, and maybe marketing, advertising, you kind of hear it through the grapevine, people talking about using other people's money. To you, what does using other people's money mean? And could you kind of, maybe explain a scenario where you would do that?
Absolutely. So, I'm in Northern California, so I'm kind of close to the Silicon Valley area, right? So, there is a lot of money out in this area. Real estate is really high. But specifically on, like a lot of these technology, people that work for these high-tech companies, right? I have a close friend that works for Apple Computer, right? And he makes a lot of money, works like a dog. He's always behind his computer, but, they pay pretty good-sized paychecks, right? So, and there's a lot of people that are like that in Silicon Valley, and they have a lot of money in their checking accounts, but don't really necessarily know what to do with that. They're just working. They're doing their job. They're being paid well, and they're good at what they're good at, but don't necessarily know how to make money on their money. And the real wealth in this world is made from exactly that. It's making money on your money. As if you have a job or you have a career that you're making, a certain amount of income, and then, you can put it in the savings account, or you can put it in the stock market, or you can, everybody wants to do something to try to hedge the inflation. This gives an opportunity for them to invest in something that turns an above average return, right? They get a much better return than they do in most of the other investments. They don't have to do the work, but yet it's kind of exciting. It's kind of fun because they are part owner. They're a limited partner in these properties. They can go to the property and see it. They can, it's something they can touch and feel. It's a hard asset. Hard assets are, especially in this economy, to me, it feels the strongest bet, because it's cash that's going to be the thing that's going to be hurt the worst, right? Or hurt the most due to inflation and, all the possibilities that could happen going forward. But the assets are probably going to raise in value.
Yeah, absolutely. It's pretty nice to see what real estate can do for you, just given that we're kind of in these uncertain times, printing more money, the inflation, and it's a decent hedge against that.
Yeah, exactly. Yeah, we look at things like, a loaf of bread, that our parents or grandparents, told us about, used to cost, 25 cents or something, right? And now it's like $4 or $5. But, that loaf of bread is worth a lot more money. It's really not because of the inflationary, figures, but that's that hard asset and those goods that are just selling for more money. And so we feel the same is going to happen with the real estate.
Sure, absolutely. It would be one thing if you were solely looking at real estate just in your backyard in Northern California, but you're in a lot of different markets. I'm just curious, how do you prevent yourself from getting spread too thin, and how are you able to manage properties in different states?
That's a great question. And the answer is good partners. And that's really key. It's key to this business. It's much better to take a small piece of something big than a big piece of something small. And you really can spread yourself, much wider if you have good partners that are on your team with you. And that could be the same partners in multiple properties, or it could be different partners. But and that takes a little, it takes some time to grow those relationships, build the trust. Typically, for me, I got into some of these deals more as a small partner, as a smaller general partner, and then built that trust by working with them on the properties and kind of going forward. And then as additional properties came up, they either brought me in a larger position, or again, in this case, in some deals now where the deals came to me and I reached out to them and brought them in because I'm used to working with them. I trust them. I know how they operate, and it just makes the process, go much easier. And we usually have boots on the ground in most of these areas as well.
Sure thing. I guess like anything else, just being around good people and having that good network is crucial. But, maybe to someone who is a novice investor, or maybe someone who has a small portfolio and they're looking to other states, how do you even get connected with other good people in other markets?
Yeah, mine have come through some of these meetups and groups. So I have some different kind of these educational meetups in multifamily that both here in the San Francisco Bay Area and across the country, different, just seminars, webinars, or just connections that you get, and just you reach out and you have to kind of make yourself vulnerable. You got to really reach out and just say, hey, I'm looking, to meet up with people, or I'm looking to do this. And, or if you have a specific market, try to go to those meetups, especially now on Zoom, do it on, in those markets, right? If you're looking in a Phoenix market, try to get into a Phoenix meetup of some sort. And you'd be interesting. You'll find out that there's a lot of people that are really looking for the same thing that you are. And the key is to try and find people that complement what you do, maybe have a strength that you don't have. If you're good at connecting with brokers or finding deals, or you really love that hunt, to find them, but maybe you're not as good at the underwriting, and you find somebody that's really good at that calculating and the underwriting, and really good at those Excel spreadsheets, but maybe they're not so good at reaching out over the phone and the communication with the brokers, right? Those are kind of two different skill sets. And those two work really well to find somebody to work with.
Absolutely. I guess that kind of ties into maybe self-awareness. It kind of, being aware of, your strengths and potential weaknesses. And like you said, having someone complement that.
Yeah, that's for sure. You have to know it all. There's no doubt about it. I'm not a whiz at the underwriting, but I definitely know how to do the underwriting. And I specifically took a course on just underwriting. And although I could tell you I kind of hate it, but I definitely know it, and I've made myself know it. And I have to know it because I get into a deal and a deal comes to me, if it's being brought to me by somebody else, or a deal that I find, I mean, I want to be sure that's a good deal for me to get into. And so I need to look at their underwriting and confirm that that is, in fact, a good deal for my investors that I want to be able to bring into that. So, that you have to know it, but you don't have to be a pro at it. You can find somebody else that's a pro at it. Yeah.
Yeah, sure thing, Mike. Well said. I'm curious as well. You mentioned you took a course. I mean, what course, if you wouldn't mind sharing, what course was it, and how did you find it?
Absolutely. So I started through the RE Mentor Network, which is David Lindahl back out of Boston. That was kind of the first course they had one, came right to the San Francisco Bay Area, and I went to their kind of free seminar, and then then you buy into the 3-day seminar, and then they have additional, some seminars on different subjects. one specifically on underwriting, one on, finding the money, one on, managing the manager. And they have pretty extensive courses there. And now obviously it's all been digital, but this is previous when it was in person. And that's really what got me through it. I mean, got me started on it. And then I found a lot of others. There's Michael Blanc, Neil Bawa is a guy who's local to my market here in Northern California. He's a great guy to follow, the mad scientist who is, great. He's great at underwriting. He's great at finding, the emerging markets and, a lot of data. He's kind of a data scientist, right? So he's able to find looking for things like the right population growth and the job growth and which markets are, increasing and kind of on the forefront of growth versus the other way around. And so some of these different educational programs they offer, it's really all the same thing, but they offer different twists on it. And by joining multiple ones and, kind of once you immerse yourself into it, you really want to learn from different people. So you're not kind of stuck in one, one way, right? And then you determine which way you like best and you move forward in that direction.
Yeah, absolutely, Mike. I really like the sound of that because it's interesting how you're kind of able to tailor, you have a tailor-made education in real estate, really, right? And it almost kind of sounds like everything you're learning is practical and you're implementing it immediately.
Yeah, that's right. And I really like that about this industry. It really is a very practical industry. And like I said, there's no real, there's no real, what do I want to say? Magic to it is what I was looking for. Yeah, there's no real magic to it, right? It's where sometimes in other industries and including the, advertising industry, right? It's like, you come up with you see a TV commercial on a Super Bowl ad, right? And it's kind of a luck of draw, right? Whether that's a super hit, and a multi-million-dollar commercial, or whether it's a failure and it doesn't ever get played again. But in this, because you're working a lot more on the emotion, the side of the emotional consumer, and the multifamily specifically is not so emotional. It's more practical. It's very, finding a property at the right in the right location that needs the right amount of rehab or value add, and calculating what it's going to cost to do that and the amount of time that it's going to take to do it, and whether you're going to be able to bring the rents up to the market value and at what time frame, and then your exit strategy of what it's going to be worth at that time and how much everything's going to be made. And it's all really calculated in an Excel spreadsheet, which is kind of amazing. You can't do that on advertising.
Yeah, I guess a bit different mindset you need to have, right?
Yeah.
Now, you mentioned something interesting, Mike, was also, you mentioned the time frame. So, whether you're flipping a house or maybe you're doing a value add to a multifamily project, I guess the idea is to buy it at a certain price, rehab it, and then get it up to speed. But regarding multifamily, when you say a time frame, is there a particular time frame that you're looking at to get that value add done, or how do you go about that?
Yeah, I mean, it depends on the amount of value add that's needed on the property, but we typically look at like a 3 to 5 year time frame, sometimes out to 7. And that's more about, we kind of keep the time frame a little loose because you don't know what the economy is going to be like in 5 years from now, right? So to hedge our bets, we kind of keep that in the underwriting. If we plan on rehabbing the units, whether it's a 60-unit property or a 250-unit property, and the amount of time that it takes to do that. You're not going to go in and just get rid of all the tenants and do it all at once. You have to kind of do it organically as the tenants' leases come up, and then you can move them into other units, or the rent gets raised, or some people leave, and then you're renovating the units during that process. So that all takes time. You calculate that, and then where it's going to at what time frame you're going to be able to get the rents to the proper amount, raise the NOI, the net operating income, and which raises the value of the property. But we try to get in and out fairly quick, and quick in the multifamily is 3 to 5 years, versus single family can be several months or less.
Sure thing, Mike. Yeah, I mean, you probably partially explained it all already, kind of, maybe the approach you take, but in terms of maybe what you learned from your course or maybe how you underwrite, I mean, when you first see a property and you're evaluating it, what else are you looking at? What are you factoring in?
Um, so to underwrite, I mean, for one, we choose the market. We choose particular markets that we really like. And again, that are, population growth, job growth, everything is, where the numbers are, pointed upwards, right, in the right direction. And then a location of the property in that market, meaning that, we try to stay within, properties that have, accessibility to obviously to commuting or to those jobs, into nicer neighborhoods. And then finding, so it's a hunt. I mean, sometimes you gotta, you're contacting 100 properties before you find anything of even interest. It can be a lot, a lot of chores there, but uh, you just be patient, and you're looking for the deals. You're looking for a property that has the value add component, where it's either mismanaged, maybe the management is not charging the right amount of fees, or not handling it right, or they're not even bringing the rents up to the market rent, or the property has maybe been renovated, has not been renovated, so maybe the units are older and so they can't get the proper rent because of that. So we'll take that in, and by renovating the units, we're able to raise the rents to the market. And again, just organically, as the tenants' leases come up, we do that. And then in a 3-year time period, or to 3 to 5 year time period, we'll renovated all the units, raise the rents, which increases the value of the property, and then we're ready to sell it and take it to market.
Sure, sure. That makes a lot of sense, Mike. I know you'd also mentioned previously some of the markets you're in. You're in Northern California, Kansas City. Were there any others that you're currently at or looking into?
Texas has been my prime market right now. Right now, I've actually into 4 properties in the Texas market, both in the Dallas-Fort Worth and the Houston market.
Yeah, definitely. So, I mean, what do you like about Texas, or as opposed to maybe other states, or what do you like about Dallas, Fort Worth, and Houston?
Yeah. Well, Texas is a landlord-friendly state for one, unlike California, right? It's just that makes it just easier to deal with. And so the laws, and as far as if you need to evict tenants that aren't paying you, or having problems in the property, it's easier to do that in the state of Texas, unlike in California. And the Dallas-Fort Worth region has just grown dramatically in population, and has a very diverse job market. There's high tech out there's biotech out there's agricultural, there's just has a very diverse job market, which is good, because you don't want to really be dependent on any one market. And because if something happens to that market, then your properties are going to go down. So we really like that for that reason. Texas is centrally located within the United States. Dallas-Fort Worth has two major airports to fly pretty much anywhere in the world, and the weather is better in North Texas and so forth. So we like all that. The living, people, the quality of life is good for people that are living there, and the cost of living compared to the job salaries is good.
Sure. That definitely makes a lot of sense. I'm only so familiar with the California market, but I have heard that Texas is a bit more, I guess, landlord friendly, like you said.
Yeah.
Yeah, absolutely, Mike. So, we've talked a bit about maybe your background, what you're currently doing right now, maybe properties you have. What are you looking forward to in the future, and what are you looking for in 2021?
2021, I mean, obviously we're looking forward to get out of this pandemic, which has been, just quite a ride here for this last year. Amazing. It's, changing things around us for forever, really. But we expect a strong market in rentals and multifamily. Um, one of the things, another thing that I really enjoy about this industry is that we're also bettering the communities. Each one of the communities that we go into, I mean, our goal is to make it a better place to live, and we're spending money on the exterior of the property as far as maybe adding, little dog parks or kids playgrounds and signage, landscaping, things that just make the property look better on the outside, and then renovating the units to make it obviously better on the inside. And we're able to really increase the value of the community, not just financially, but as value and the asset to the city and to the people who live there. So that we enjoy that, and I think that concept will remain strong, going forward, no matter what, right? So no matter what happens to the economy or interest rates or inflation.
Yeah, absolutely, Mike. Well said. Is there anything that you haven't said that you'd really just like to hit home?
Um, no, I just think that anybody that's interested in the business, is great to get in and learn it and learn everything you can learn, and then, find people to partner up with and be part of a team.
Yeah, absolutely, Mike. Maybe someone that's listening is in Northern California, they're in Dallas, Houston, College Station, wherever. How can we connect with you? Where can we find you?
Absolutely. So my email address is mike@growcaptoday.com. That's also my website, and they can reach out to me. I'm happy to discuss the industry. I like talking about it. Regardless, I've done some coaching with some students. I've sponsored some deals for other people. So I'm always happy to talk about it.
Wonderful. That sounds great, Mike. It's been a real pleasure having you on the show. We've talked a bit about your background, a bit about marketing, advertising, real estate, what you're doing now, what you want to do in the future. So thank you so much for coming on the show.
Thank you, Aaron. Thank you for having me.
Talk
Terrific.
to you soon.